So I would like to welcome everyone who has participated in this event, and also would like to thank Equalify to hosting this event with all and giving opportunity to all the emerging AIF managers to help them in understanding the nuances of this AIF industry, and will help them to set up the AIFs. So the flow of the event would be like this. So I will start my presentation, and so I will skip some of the parts which you must have already seen or heard in the last couple of sessions, and more focus on the merchant banker role and the other part. And after that, we'll have a Q&A. The questions you can, for asking any questions, you can type in the chat box, and I'll try to answer all the questions as per my best ability of my best. I just start the presentation. These are the topics that I will cover during my presentation. Introduction, fund structure and steps to set up an AIF, contents of PPM, role of a merchant banker, beyond compliance, diligence by merchant banker, recent developments in AIF, and about keynotes and our offerings. So SEBI has come up with the regulations in 2012, wherein they've defined how the AIF, all the fund industry in India will be regulated, and all will be covered under SEBI AIF regulations in 2012. The philosophy of having this regulations is to all shades of private pool or any investment vehicles having in India, they should be on a par and covered under this regulation, so that there won't be any systematic risk to these AIFs or the fund vehicles. So there are three types of categories of funds: category 1, 2, and 3. And all the funds who are registering in India has to cover or has to choose any one of the category, which is category 1, 2, and 3. I'll come more about on these category 1, 2 in next slide. So as of now in India, we have about 950 plus registered AIF, which is almost 4 times than previously in 2016. Currently, breakup of all registered AIFs under category 1, 2, 3 is 23, 60, 59, and 18% respectively. And the current commitment of the funds in the all AIF registered with SEBI as on March 2022 is 6.4 lakh crores, and which has grown almost triple in last couple of years. So these are the three categories of AIFs: category 1, 2, 3. So although you must have heard about these things in the past sessions, but I just put the comparison in these three funds. So basically, in fund 1 and 2, both funds are close-ended funds, and category 3 is you can have open as well as close-ended fund. In category 1 and 2, the SEBI has given a specific format for category 1 and 2, which is as per Annexure 1 of SEBI circular. And for category 3, they had given a different Annexure 2 as SEBI circular for the format of the PPM. The minimum tenure normally we have seen is 3 years in category 1 and 2. And for category 3, it varies. If it's close-ended, it is around 5 years. And if it's open-ended, it can be infinite also. The registration fees by SEBI in category 1 is 5 lakh, for category 2 is 10 lakhs, and category 3 is 15 lakh. In terms of taxation, for category 1 and 2, there is a pass-through of tax in category 1 and 2 funds, when investor has to pay the tax according to his slabs of income that he falls. In case of category 3, the option is given to the fund. Normally the fund pays the tax and then investor is getting the exempt income. These are the primary difference. Apart, the one more difference is in category 1 and 2. So the leverage is allowed in category 1 and 2 only for temporary purposes up to 30 days, just to meet the working capital kind of a thing. In category 3, you can leverage up to 2 times of your NAV as on the particular date. This is a typical fund structures where you can set up AIF either in form of trust, LLP or company. Most of the AIFs that we see apart from 1 or 2 all are under in form of trust. Then you have the sponsor whose role is putting up a minimum capital, or they can put more, and they have to have maintained minimum capital as required under statutory regulations. Then you have trustee, which trustee will get into an investment manager agreement with the investment manager and give the management powers to the investment manager through IMA. All the investor, whether it's a domestic or offshore, all the investor will participate in the fund through a contribution agreement. Initially, first document that will be given to the investor will be PPM. They go through the PPM, and once they agree to come on board, then they have to get into a contribution agreement, which is supported by the reasonable stamp duty as applicable. And then this vehicle, investment manager manages all the investment management and do the investment from the AIF, which is a trust. And whenever there is an exit, the money again comes to the AIF. These are all the intermediaries involved in a fund: trustee, merchant banker, tax advisors, fund accountant, banker, RTA, auditor, valuer, custodian, legal advisors. I'm not touching explaining all the trustee, all the intermediaries, as you must have already covered, and some of them you cover in future sessions. These are the generally steps to set up an AIF. Initially, first step is that you have to finalize the structure of an AIF, preparing fund documents. Like the first and most document is trust deed, then PPM, then investment management agreement, the contribution agreement, and so on and so forth. Then we have to, we as merchant banker have to do the diligence, and we issue a diligence certificate on the PPM. Fund submits the application in Form A along with the draft PPM as well as the merchant banker diligence certificate with the fees as applicable. Then SEBI gives the clarification or ask for additional information as may be required, depending on the disclosures and the annexures or the clarification submitted in the application. Once SEBI satisfied with all these things, then they give the AIF registration certificate to the AIF. Along with the application, along with the application or registration for AIF, you also have to submit one PPM for a scheme. And so the registration, normally all the registration happen with the one scheme. After that, you can have the multiple schemes under the same registration, under the same category. These are the key regulatory considerations which you need to keep in mind while applying for AIF registration. The investment manager entity should be based in India and has all the necessary infrastructure, manpowers, the research and everything to discharge its activities of fund management. SEBI has prescribed certain qualification in terms of experience of the fund manager, like at least of one key person of fund manager has to have the at least of not less than 5 years of experience, either in PMS, asset management, wealth side, or any other fund activities, and also have any professional qualifications. All the applicants, sponsor, investment manager, intermediaries involved in the initial setup of the fund, like AIF, the trust, the sponsor, the manager, and the people who are mentioned in the PPM should be fit and proper. and they have to give the declaration as prescribed in the SEBI intermediaries regulation. The minimum corpus of the fund to start with has to be minimum 20 crores. Minimum contribution per investor is prescribed as 1 crore, and for employees, director of the fund and manager, it can be 25 lakh rupees. The maximum number of investors allowed in a fund is 1,000. The sponsor commitment is defined separately for category 1 and 2 and separate and different from 3. So in category 1 and 2, the continuing interest has to be 2.5% of corpus of the fund and 5 crore, whichever is lower. In category 3, it's 5% of the corpus or 10 crore, again, whichever is lower. And this money has to come directly from the fund, not through any waiver or anything else. If there is any uninvestable portion in the fund, they can invest in the high quality, high liquid assets as mentioned in the PPM as temporary investments. For valuation, for category 1 and 2, they have to do the valuation at 6 months monthly interval, and for category 3, if it's open-ended, then monthly, and if it's a close-ended, then quarterly. All the AIFs, whether it's category 1 or 2, all the AIFs under category 1 and 2 have to appoint custodian if it's beyond 500 crores, corpus is beyond 500 crores, and for category 3 is compulsory to have a custodian. Leverage, as I already explained. And in terms of RTA, so nowadays all the money that you are receiving in the fund is subject to the stamp duty. So you need to have a RTA who will deduct the stamp duty from the subscription and pay to the respective state governments. So yeah, the content of the PPM. So basically the PPM has been divided in two parts. One is part A and second is part B. Normally in part A, you give all the disclosures as per the format given and required for investors to take a informed decision. And in part B, you can provide any additional or supplementary information which you would like to highlight to the investor. Generally, the entire PPM, you have to remember this thing, the entire PPM has to be in consistency and all the terms has to be in consistent and defined similar at the end, in the entire PPM, and it should provide all the clarity and uniformity of the content. Also, when it comes to the structure strategy, we should be the fund management, the investment manager should clear and concise, and it should be as per the AIF regulations. These are the standard sections which has to be there in the PPM. Some of the sections are not applicable to all the categories of the AIF, but these are the standard sections which has to be there in the PPM. Executive summary, market opportunity, Indian economy outlook, investment objective strategy, fund scheme or structure, governance structure, track record of manager, the past track record of the manager. If it's first time manager, then there is a separate requirement. Principal terms of the fund or scheme, principles of portfolio valuation, like how you will value the investing companies, and determination of NAV, method of determination of NAV. Then the conflict of interest with the other businesses, risk factors. Risk factor has to be there for all this, like regarding the fund, the tax, then the global economy, the domestic factors and everything. Then legal, regulatory and tax concessions, illustration of fees, expenses and other charges. Distribution waterfall include various possible scenarios, like there are different fees or there are different scenario where you have to charge after certain expenses. So you should provide all the scenarios in distribution waterfall illustrations. Then discipline history, again the investment manager, sponsor, trustee and its director, apart from group associate and group companies. Then glossary, where you define all the sections, all the definitions, and then any additional supplementary information which you need to provide. So we recently come up with the circular and they asked us to put an investor charter as well as the litigations or any complaints that they receive from the investors. So, role of a merchant banker. So now SEBI has come up a circular in October 2021, which is applicable from with effect from 11th November 2021, where they put the role of a merchant, where they put a merchant banker as an intermediary between the AIF and SEBI. The reason of having a merchant banker as intermediary or anybody else, I believe the reason of thinking this, because merchant bankers were having a experience of due diligence in case of IPOs. As a merchant banker, we are doing the due diligence of all the prospectus, the draft prospectus, then the open offer, takeovers, right issues. So we had a relevant experience, and second, we are also regulated by SEBI. So that could be the two reasons where they feel that merchant banker is the right intermediary to have and to do the due diligence and have a role to play in this. Also, we as a merchant banker understand the philosophy and the thought process of SEBI, what they expect on due diligence. So that could be another reason of having merchant banker as a due diligence intermediary for all the AIFs. So the merchant banker has to give the due diligence certificate on all the PPMs filed with SEBI. There are a couple of exemptions where merchant banker due diligence certificate is not required. And those are, one is the large value fund for accredited investor, second in case of angel funds, and third is the funds set up at the IFC gift city. The merchant bankers due diligence certificate required on 3 occasions only. One, if you are going for a fresh registration or new registration for an AIF. Second, if you are launching a new scheme under an existing registered AIF. Third is annual intimation that you have to do for all the AIFs within 1 month from the end of the financial year. Apart from these 3 occasions, merchant bankers cannot issue the due diligence certificate. The merchant banker has to ensure a lot of things apart from the disclosures, then the due diligence, then the process fit and proper. They have to make sure that the PPM has been adhered and followed the PPM template as prescribed by SEBI. We have to have the discussions with various directors, KMPs, key investment team, personnel of the AIFs. We also have to verify whether the objective of the fund is aligned with the AIF formation documents, which may be LLP agreement or the trust deed. We also have to see whether the fund has complied with all the applicable regulations and circular issues as and when issued by SEBI. We have to verify all the documents, we have to assess and make sure that all the risk has been disclosed in the PPM. So I believe that SEBI wanted to have it's like first layer of due diligence that we have done it, and that is what we have to make sure. And SEBI has also prescribed the format of the due diligence, which has 2 annexes, Annexer 1 and 2. So Annexer 1 talks about the pair-wise compliance of all the regulations as prescribed under SEBI AIF regulation 2012. And Annexer 2 have a particular questions where you have to answer and in yes and no, and provide the relevant page number in the PPM. So while filing PPM, the merchant banker has to fulfill the responsibility of due diligence, verifying and validating the information of the disclosures as given in the PPM. So while doing the due diligence, we have to keep certain things in mind. So like we have to confirm that PPM is in conform with as per the document, the material, the fund documents, regulations provided to us. The AIF sponsor, manager, and individuals mentioned in the PPM are fit and proper as per SEBI criteria. None of the intermediaries as mentioned in the PPM are debarred by any regulatory authority. Material disclosures like all the disclosure as required has been given on true, fair, and adequate, and should be as per the latest available information, so that investor can take the informed decisions. Then merchant banker also need to satisfy themselves that the sponsor is having a capability of having a continued interest in the AIF or the fund or scheme. we have to submit the diligence certificate at the time of filing of PPM along with the annexure form A, as I explained earlier. And the annual DDC, the timeline is 30 days from the end of the financial year. And if you are launching any new scheme under the existing registration, then you have to submit the PPM with the diligence certificate 30 days prior to the launch of the scheme. Merchant banker also has to ensure that all the comments or the suggestions given by the SEBI has been incorporated in the PPM and need to confirm to SEBI stating the same before launching the said scheme or AIF. These are some of the recent circulars or regulations which has come in last couple of years. Idea of putting those regulations is that now SEBI is wants to put a lot of onus or along with the responsibility to the investment manager, so that they can ensure everything, and they can since the size is growing day by day, so all the funds has to be in the same line. They follow the standard practices, and so that all the investors can take a decision based on the similar base or the compliances. Some of the compliances, that stewardship code, which was already applicable to the mutual fund and other institutions, is now applicable to the AIFs also. Then they come up with the standard PPM format, then stamp duty, then the IC. So I'm just not getting into the detail in all the circulars. Some of them are very important, like SEBI has put the onus of benchmarking. So as of now, there are 3 agencies which you have to give the data to all 3 agencies and take a customized benchmarking report from any one of them. And you also need to disclose those benchmarking wherever you are giving your performance versus the this benchmark, the other AIFs. Then also recently SEBI has changed the concentration norm for AIFs. Earlier it was 10% for Cat 3 and 20% for Cat 1 and 2 of investable funds. Now the SEBI has come up with either it should be based on investable funds or NAV of the fund. There are certain disclosures and reporting requirements. Although the earlier quarterly reportings has been postponed to December for the 4th quarter of this financial year, when they provided the 10 days, and it will be more on detailed reporting. They also given an investor charter and disclosure of complaints, which we have to add in the PPM. For the existing AIFs, they need to inform to the investors, and for the new AIFs, they have to add another section, new section in the PPM about the same. Then recently, SEBI has come up with 2 more concepts with large value fund for AI. There they defined the large value fund has been defined as like any fund which is having all the investors have invested more than 70 crores. They have also given a definition of AI based on the net worth and the income criteria. And some relaxation was also being provided, like in terms of investment, the size, the concentration, and all this. And recently, SEBI has also come up with the new concept called special situation fund, and this they added a new chapter in the regulation, and the new category has been come in category 1 AI. Earlier, the special situation fund were applying for under category 2. Now SEBI has come up this circular where they said that they have to come up under category 1. Again, there's a minimum corpus of 100 crores. The size of the minimum investment by each investor has to be 10 crores, and so on and so forth. Just about Keynote. So Keynote is a category 1 merchant banker since 1993. We had a experienced professional, senior professionals and qualified people to assist. We have been there market since 29 years. And in last 29 years, we have issued due diligence on more than 400 plus documents along with the due diligence certificate. We have very professional and team where they have the practical exposure to the AIF industry. we have very conversant with all the regulations, whether it be the AIF or ICDR or any of SEBI regulations. We are providing we are a full service investment bank and providing an entire bouquet of services, starting from ECM to M&A, the AIF, the corporate finance, private equity, debt advisory, valuations, ESOPs, stock broking, and subsidy. We have two subsidiaries, wherein we have one in the stockbroking business and second is in NBFC. We have a very excellent track record with all our clients that we have worked. We know all the intermediaries present there in the market. These are the services that we are providing to AIFs. These are some of the clients. We cannot name because of the confidentiality clause, but even these are the services that we offer. These are some of the senior professionals involved there with the Keynote with since long. These are our contact details. You can reach out to us for any queries or any if you have any questions, or if you want to meet, or if you have any discussions or any further queries in relation to AIF or related services. Thank you. Now we can take question and answers. Yeah, the first question is, does the investment manager entity need any specific kind of license to be eligible to be an investment manager to an AIF? No. SEBI has prescribed certain experience of the fund manager or investment manager. If investment manager is an individual, then fund manager should have at least 5 years of experience or relevant experience of fund management, either in PMS, wealth, stock broking, or if it's an entity. So any of the partners, the designated partners should have that kind of experience. And there is no separate requirement of having any registration for investment managers. Does the investment manager entity need any specific? I already covered this. What do new investment managers have to disclose in the track record of managed research? So SEBI has given the format. If you see this format, I'll just tell you. So the investment manager, the new investment manager has to provide their past experience if they worked in any mutual fund or PMS, so they can give their performance there. And if not, then they can provide your working experience there. And can you go back to large value fund? Wanted to understand the minimum amount. Sure. One second. The minimum amount prescribed for each by each investor is 70 crores. Next is wanted to. What kind of ballpark expense will have to be incurred for DTC issuing merchant banker for setting up a 20? Thanks, Jayji, asking this question. But I think since we are working with Equalify, and Equalifier has asked all the intermediaries or all the cohort mentors to work on a special fees. So that I would like to keep it with whenever we have one-to-one discussions. Thank you. The recording sessions of all the past sessions or including these sessions will be available on Equalify website, and they will intimate you through their email, and it will be there on website, and they will also send you the intimations for that. What are the requirements events of appointing a manager? For existing AIF, if they are launching any new scheme under the existing registration, then you need to have a merchant banker. And or you are applying for a new registration itself or different category, then again you need to have a merchant banker. And if you are having any existing AIF where you have to do the annual diligence and take a diligence certificate on annual basis from the merchant banker and submit to SEBI within 30 days from the end of the financial year. For existing AIFs, only this annual certification is required if you are not going for any fresh registration or new scheme. The maximum, what is the max? The maximum amount allowed to invest in an investee company is depend on the category. In category 3, it's a 10% of the corpus, and if you choose to corpus defined as the investable surplus or NAV as chosen by the fund manager and mentioned in the PPM. And for category 2, it is 20%. And there are any cap to investors? Yeah, there is a cap of 1,000 number of investors in any fund. And once you think that you are coming closer to that, you can have another scheme in the same registration. Can you elaborate a bit on the concept of adding a scheme within a registered AIF? How does that work? Is that situation? So when you apply for a new registration with the SEBI, you apply with a new scheme, a fresh one scheme, right? And if you feel that you need to have another scheme in the same category, let's say you applied in the category 3 and you applied for close-ended fund. Now, if you want to have the another scheme which open-ended, or you want to have different strategies, or the objective is different, then you can have another scheme in the same registration, and you just need to file the PPM along with the due diligence certificate before 30 days of launching to SEBI. So there is no need or to take any registration again. The Form A will not be applicable. The only PPM along with the due diligence certificate will go to SEBI for their approval or comments. I hope I am able to answer the question. When we should appoint for PPM audit, is there a time? So the PPM audit, the SEBI has allowed SEBI has put a onus of doing the PPM audit either on the legal professional or the auditors who are already doing the audits. And merchant banker is not supposed to do any PPM audit, and we are not eligible also to do any PPM audit. Here we are talking about the issuing of due diligence certificate on PPM, not the PPM audit. PPM audit is different than the due diligence certificate on PPM. And the PPM audit that you have to do it on annual basis and need to submit the copy to the SEBI investment manager and trustee within 180 days from the end of the financial year. And this certification, this merchant banker due diligence certificate, that is, as I already explained, is only on 3 occasions. So CAT 2 can have one SEBI approval and keep launching funds in various names. So yes, you can have different schemes and with the different names, but the investment manager, sponsor, and trustee has to be the same.
timeline वगैरह.
Hi, Ashwarji. The if you are applying for a new scheme under the same registration, then the trustee sponsor all the key intermediaries has to be the same. That is trustee, because the trust has to be the same. Then the investment manager as well as the sponsor. If there is any change, then you need to apply for those changes. For approval, you need to take the approval from the SEBI for changing in the investment manager or the sponsor or trustee. Thank you. So, SEBI, the after putting merchant banker as the intermediary for doing the diligence, we expect that SEBI will clear faster than the earlier occasions. But there are so many backlog of the PPMs in the past that SEBI is trying to clear all the fast. But going forward, it should be in less than 3 months time. As of now, it is taking little longer time, but as we move forward, it should be the less than 3 months time. This is what we expect. Once SEBI is able to clear all the backlog or all the existing applications of the registrations. I would also like highlight on the timelines of merchant banker diligence, or what is the right time to involve a merchant banker in the entire process. So normally we suggest that while you appoint a lawyer or legal firm, or decide to form a AIF, if you involve us, so we'll simultaneously will also work with you and we start our diligence process. And by the time you come up with the final PPM, we are also ready with the diligence and comments on the PPM. And within 1 day's time, we can issue the diligence certificate if you have worked from the initial level. If you come up with the final PPM and after that you will involve us, so we take normally a week's time to go through complete the entire process and issue the diligence certificate. There is a question by Jara. So yeah, AIF can be like an umbrella entity, but that registration SEBI gives by category wise. So like category 1, 2, and 3. If you have, let's say, category 2 registration, so you can only have a schemes under category 2. You cannot launch or take the benefit of category 3. So yes, definitely AIF can be like AMC, and you can have a different schemes like mutual fund. But except that the minimum investment by the sponsor in all the scheme has to be maintained, and the minimum investment size has to be 1 crore per investor. So answer to your question is yes. The another question is, do they issue an observation letter like in IPO? So they don't issue an observation letter, but they give a letter which doesn't have any observations, but they provide, you can go ahead with this, and these are the regulations and the compliance that you have to ensure as you go forward. It doesn't have any comments per se, because all the comments has to be sorted out before getting the final observation from SEBI. So there is no observation letter per se, but there is an intimation of the approval as well as the regulation that you have to follow post launching of your fund. Can AIF have its own website? Is there any regulations? Yes, you can have your own website. Rather, you should have your website so that you can disseminate the information as required under statutory guidelines as well as to your investors. how much prior to registering for or approval can you start reaching out to prospects for investing in your area? So you can start anytime, there is no restriction. But the thing is that if you have to clear in certain aspect in terms of your strategy and investment objective. Second, the commercial side. So you should have, if you have everything, you can have an investor interest anytime. But the thing is that unless until you freeze your PPM, you cannot, you won't be able to put certain aspect in the your marketing material, or when you approach the investor, they will ask certain questions which you may or may not aware. So it's better that you have principal terms of any of launching an AIF in your discussion note with the investor, so that it carries all the initial information required by the investor. But if you, and second, once you have the investor interest, after that you have to move fast. But at least it will take 3 to 6 months time to set up an AI from the zero date. Can a sponsor entity raise a CCD or a quasi-debt instrument for sponsoring AI? So there is no restriction of how sponsor is raising money in the sponsor entity. The money which is there in the fund as a sponsor commitment has to be there for continuing till the fund is not closed down or liquidated. Otherwise, there is no such requirement. But normally, when you are having a long-term horizon of the fund, 5 to 10 years, people don't want to have it in the form of debt or this thing, because there may be some other regulatory issues of income tax and others may come. So what is the most challenging part that you have experienced in DD? So the challenging part, if you'll ask me, frankly, see, SEBI has come up with the circular and the requirement in November, but there is no standard procedure or format prescribed by SEBI. This is how you have to do the diligence. So in absence of any procedural part on the diligence process that investment merchant banker has to follow, so we apply our best of our effort and we apply our mind and then do the diligence. So we have seen a lot of funds show some resistance in form of sharing the document or providing certain information which they feel it may be confidentiality. But I would like to mention here that since merchant banker is doing the diligence and they are providing a fit and proper and another confirmation on your PPM, so they are having more risk than you. So they are also sharing an equal risk than investment managers are. So I think all the AIFs can freely share the information as required by the merchant banker, so that the things can move faster and it helps everybody in the system involved for the AIF. The next question is there any requirement of providing intimation to SEBI on changes in PPM? If you are asking for annual thing, so for annual changes, all the annual changes done during the any particular financial year has to be intimated in 30 days. But if these are any material changes where you need to take the approval of investor and SEBI, yes, you should intimate them as and when as required or as an event. But for any other generic changes in the PPM, so you can intimate all together during the annual update of the PPM. Any other question? If you have, please, you can ask now also, and you can reach out to us through the email IDs which we have mentioned given to the Equalify, and the email ID is AIFMBD@keynoteindia.net. You can visit to our office also in Dadar, Mumbai. These are our, if you want to reach, you can reach out through email. You can follow us on LinkedIn. Our hashtag is Keynote India. And you can also call us on 022-6826-6000. Just wanted to clarify, according to one of your early slides, the sponsor investment manager can be different entities. If yes, the investment manager does not have a minimum investment commitment. So investment sponsor investment manager can be the same entity. There is no restriction of not having the same entity. In case if you are having a separate entity, then the minimum sponsor commitment has to be done by the sponsor entity. If both the entities are the same, then you can do from the combined entity and invest in the fund as a continuing interest commitment from the sponsor. The investment manager does not have a minimum investment commitment. If both the entities has to, if both the entities are same, or it's a combined entity, there is no different entity, then there is no separate investment manager and sponsor. Then that entity has to subscribe for the minimum investment amount in the fund. If any other questions are there, you can always reach out to us. And the Equalify will also share the kit wherein all the required details and the presentations, recordings, all this will be available to you. In soft, they will mail you also, and they will also put them on their website. You can get everything from there. And still, if you need any assistance or anything from us, you can directly reach out to us also. In next, so there are still there 5 minutes. So in next 5 minutes, I will, if you have any other questions, please ask in next time. Thank you. So the question on the warehouse investment, can you throw a light on warehouse investment? So normally warehouse investment is the investment where you, before, let's say you are in the fundraising process and you have taken the first drawdown, or it's taking some time to take, to invest and to get all the money as required to invest a particular investment from the AIF. So that, if you would know, if you like that company, you can invest, the investment manager can invest in that company. And later on, once you raise the money in the AIF, you can pass that investment to the, transfer that investment into the AIF on certain preconditions or certain parameters that you need to take care. And that is called warehouse investment. And you have to disclose who can invest on behalf of the AIF for warehouse investment, and what are the conditions, what are the parameters that will be applicable to transfer the warehouse investment from the warehouse investment vehicle to the fund. And all these things needs to be disclosed in the PPM for the benefit of the investor as well as the regulatory requirement. In the context of what you explained today, how long does the registration process differ for GIFT City? So the registration authority in GIFT City is different from the registration authority for the other than GIFT. So here the registration authority is the SEBI, and there the registration is the GIFT City authorities, which is IFSCA A. So there, if you are launching a fund in the GIFT City, then you have to apply there, and the registration authority is different. Here, if you are applying, and there the SEBI AIF regulation doesn't apply in the GIFT City. Wherein, if you are applying other than GIFT City, then SEBI AIF regulations 2012 will be applicable that AIF, which is not there in GIFT City. What are considered as business income in AIF? So, see, for category 1 and 2 is anyways pass through. So that fund is not required to bother much on the nature of the income or the taxation of the respective income. But in case of category 3, so if you are not having any long, if you are a long only fund, if you are not having any leverage, if you don't do any FNO future derivatives, then you will be considered as a long only fund, and you can have a taxation as long term at 10% and short term at 15%. But I am telling you, all these are the general principle. Obviously, you have to look into the nitty-gritties. And if you have any income from the dividend, then this income will go as a business income, and you have to pay the full tax as 30%. And if there is an income which is from the bonds or from the interest income or income from liquid mutual funds, then all will be taxable as highest slab rate, which is 30%. Would you able to shed some light on the how an AIF fund investing globally on behalf of Indian work in GIFT City? So GIFT City is very vast and different topic altogether. So I would suggest that we'll have a separate discussion of GIFT City, and that will be covered, and that will cover separately, because it's a totally different and a vast subject. It will take a lot of time to explain you, because the requirements are totally different than what we are having here. Is GST certificate required for AIF scheme? So registration for AIF is not required, but yeah, whatever expenses that you are paying, be it any kind of fees or investment management fees, performance fee, anything, you have to pay the GST. But since you don't have any income which is applicable to the which have the portion of GST, so you don't require to have a registration GST registration certificate. If you are 100% long only closed-ended fund investing in listed securities only, can you register as category? No, you can't. If you are 100% long only fund closed-ended investing in listed securities, then it has to be Cat 3, because in category 2 you can invest only up to 49% of your purpose in listed equity, and 51% has to be unlisted. So you can't have a 100% listed equity in Cat 2. For that, you have to have Cat 3. Is LEI, so legal entity identification is compulsory only for the transaction above 50 crores. So if you are doing if you anticipate or doing any transaction above 50 crores, then you should have a LEI registration. Otherwise, otherwise you don't require to have a LEI registration as of now. Thanks a lot, everyone, for patiently hearing about the AIFs and asking so many questions. And also, I would like to thank everyone who has appreciated us about this session. Thanks a lot. Look forward. If you feel anytime, if you have any queries, then you can reach out to us, and we'll try to resolve all your queries at the earliest possible. Thank you. Thank you, everyone. Bye. Take care. Good night.